Mic check. Let's try it again. Mic check. If you are thinking about upgrading to Microsoft Windows 11, don't. It's not cables. Nightly Strategy Podcast for August 23rd. Thank you for your patience. All right, we'll start with market 150. The sell-off from yesterday below the PSAR maintained. It's holding at about 413. So it didn't fail much further, but there was no sign of recovery. But the fact that it did not fail, I take to be a positive sign. It's still in a even more critical state today than it was yesterday. You can see that we ended up in a doji today and opened right where it closed. Small range, holding right at support. So this would be a natural springboard, but also I'm going to show you some stats on why we need to really be careful about this on a return down to below 400. Not unexpected. So today's price action sold off and then just mucked around. Came into the station with the PSAR, so we would treat that intraday as a wonderful opportunity to go. So tomorrow, any breakout above like 413 is instant buy, looking for a return to 418, and then close the gap to 422. So 2 legs up to recover the previous strength. Those are the 2 tactical trades. The fail below 412 gets you at least below the 10-day low at 410, and then the bottom drops out of it. So critical state everywhere you look. All right, the indexes, the S&P off 0.24, diamonds and treasuries off 0.5%. The Qs were slightly better at only down 0.08. The Russell at 0.16, emerging markets 0.53. So a very tight 1% range between best and worst. That's the kind of range compression that we had today. Tesla was way up at the top at 2.25. So let's take a look at the failures and look to get postured for tomorrow. So again, the S&P 0.24 was one of the worst performers, but tech 0.26, finance and staples 0.4, ARC innovation and real estate 0.5 and minus 1.3, and the VIX off 5%. So that actually is a sign for strength tomorrow when portfolio insurance is going at a deep discount. Individual companies, Rivian and Squarespace off 2.5 to 3. Microsoft off 0.47. Good. Fallen a bucket. PayPal and Coinbase 0.4. And then Apple right around the market at 0.20. So actually, this was there were more things on the upside than the market today. There was very little broad-based weakness. Only tech and finance were the noticeable weaknesses. Of course, so that's going to leave a lot of goodness to the upside. Let's see what outperformed today. S&P 0.24, the Qs 0.08, Commercial real estate, 0.9. Now a cluster of FANGs, Aussie dollar, consumer discretionary, and marijuana from 0.2 to 0.35. Then the great big chunk here, blockchain, Mexico, the lumbers, clean energy, materials, wheat and precious, agriculture at 2055, up 1.5. Robinhood, blended commodities, another strong day there, up 0.1, 1.6. Archenomics, global future of finance, lithium, biotech, oil exploration up 2.3. Bitcoin, 2.5. Oil and uranium, 2.8, 3.2. Strong in energy, 3.6. Brazil, 3.65. Blended large cap crypto and Ethereum, 10%. Alcoa, 5.6. Strong in Devon and Cliff at 3.5, and U.S. Steel. So basically, our metals and energy company were just crushing it today. And when those are working, I look no further. So I'll be looking for some more from them tomorrow. Tesla closed at the crucial 889, so it's just below 900. That's what's crucial, not 889. That's nothing magic about that. But the fact that it's near 900 and ready to rebound is going to be an important one for tomorrow. This is the, if this will work for me here. Come on now. Really? Come on, Windows. One of the known bugs in Windows is it will not always respond to opening programs on a known glitch. Not irritating at all. Not at all. All right, so here's a quick lesson from the daily report. I'm going to go back into some of the supplemental charts here, and what I want to talk about here is the z-scores of the 3 regression lines. All right, so we're talking about the z-scores of 3 regression line slopes over the last 180 days of the S&P. So you can read the text inside here. And what I want to show is, first we're going to look at the long-term trend, which is the RL90. That's the this is the z-score of the slope. So if I were to draw, the 3 regression lines on price down here, blue line is the price, green and red is the envelope of the river, so you can roughly see where price is. So when price is going basically sideways, the regression line through that has a slope of 0. If you were to go find the strongest upward 30-period regression line slope, you'd see those two. So if you went back for 30 days, you would say, oh, that price, that was the steepest upward slope that it ever could get to, except for this one. Both of those were amazing. This was a 3 sigma, and this one was a 2 sigma, terminating right here and right here. So those 30-period time frames were really upwardly sloping. And so what we do is we go back the last 180 days, and then we plot, we find that angle, we find the slope of each of those daily slope values of all 3 regression lines. And then we find the steepest up, and then the steepest down that it ever was, and then the rest of it kind of fills in like this, and you get an array of various slopes. Then we put statistics on that and go max, min, average, and then plus or minus one standard deviation. So you get essentially that same z-score ladder, plus one, minus one, and so forth. And that's what this array looks like. Now what you get when you do that is a very smooth time series of the relative health of the market as measured by the slope of the 30. And in previous lessons, I've talked about how important waiting for the turning point in the 30-period slope really is. Now, what I want you to notice is that whenever you get past z plus 1 and below z minus 1, you're entering into periods of abnormal slope. You know, significant moves up, that's like this one and this one, and then significant moves down, you know, sharply selling off. So when you are in this position in price, and we saw a supported spring crossing and then some COTA 2s, and now after 30 or 40 days, we're feeling fat, dumb, and happy about this this gain that we've made right here, which I'm going to show in green. And that was really a strong move. And it starts to peak. One of the things that we do is you take a look, what is the slope statistic in the RL30? And you notice that that thing had gotten to an extreme reading up. Very hard for that to continue to go like that. So a rollover would be natural. All right, well, what happens when it gets above Z1 and then rolls over, like it did here, like it's doing right here? Well, one thing we can do is we can take a look at the RL90. What is the RL90 doing? Well, at this point, notice what had happened. The RL90 had been at +1 and everything was happy. That's where we were at a peak all time in price. The slope of the RL10 was at +2 sigma. The 30 period was at +1. The RL90 was at +1. You can't get any better than that. And there it is at an all-time high. Now, it rolls over. The RL90 rolls over, the 30 rolls over, and you get this long period of suffering. And then that bottoms out, and then it has a little recovery. Now, notice what happens here. In this little recovery, the RL30 slope gets to +2. The RL10 gets above +3 because of that last spiky move up. And the RL90 has just reversed from a deep sell-off and is starting to feel a little comfortable. Then the RL10 rolls over, price begins to collapse. The RL30 rolls over, and then that thing just keeps going all the way down to Z-4. So I want you to notice the symmetry here. After this sell-off period, the RL90 had bottomed out around Z-3.5, and then this little move up is giving you a recovery move in the RL90, so we're starting to feel good. The RL30 moves to an extraordinarily high level, and the RL10 has rolled over and has come all the way back to -1. So that tells you this is already a significant pullback over the last 5 to 10 days. And it's still early days in the RL90, meaning that this is a fragile move in terms of the long-term holders who are still sensitive to the size and pain of that 25% sell-off, which has recovered 15% to the top, but is now already back off 5 more percent. So we don't know how far this is going to go. We don't know how far this recovery or this little retracement could be. But remember, the primary trend is still down. Why? because the RL90 is still below the zero line. The slope of the RL90 is still down. It's not down by much, but it's down a -1 sigma. The RL10 is already collapsing, and the RL30 has just begun to fail from an extreme reading to the upside. Now, I don't know if it's just going to come back and hold like it did here and then rebound, or if it's going to come all the way back down to here. But the point is that this little condition is identical to this condition and to this condition, after which there were sharp sell-offs from both of these peaks after the RL30 had made a nice move and then rolled over. It was followed by sharp sell-offs that lost another 15%. And we are in bear sideways. So we are not out of the woods by any means whatsoever. And so respect to the downside is absolutely crucial. Like the RL10 has not even, it is just beginning to go abnormal. And notice how the RL10 oscillates. That thing can get very sharp 10-day moves up and sharp 10-day moves down, which is why swing trading can be so lucrative if you can find those turning points. Find an SSC and some COTA 2s on the way up, but don't believe in it. You still got to respect your stops so that you don't get smashed on that retracement. So, bottom line, this is a critical state. The 30 has rolled over. The RL90 has gotten out of despair, but is not healthy by any means. And the RL10 is just on the verge of collapsing. So we just came back into the river. The reversion to the mean would take it down further. A test of the bottom of the river would be here. And then this is where you get the collapsing dragon around 370. So let's be mindful of the power of the bear market. He's been dormant for 40 days, and when they wake up, they get hungry. So, word to the wise: respect your stops. The same discipline that allowed us to manage our trades on the way up is the same discipline that we use on the way down and trading in between. That's what I want to say. Okay. Back to the daily report. It should be exactly the same feeling that you get at the top of a roller coaster that has just chugged its way to the top. That's exactly what you should be feeling, wondering what's next. All right, sniper trade of the day. This is CLF. 3 minutes. Here was the close. Here's the nice big gap up. Here was the open. Here is the opening range 3. The second bar continues past there. I buy it in the usual way. Standard risk box. 10 cents in Cliff. That's the R10. It moves up and holds. This was a natural place to put a second position, but I had other positions and was fully committed in the early moments with 4 different symbols with 1 load on each. So I was not putting 2 positions on, but I got all in. So this one rolls up a second leg up. This was an R10 wiggle, which might have been another position to the upside. It rolls over. I gave it all the way back to the PSAR, which was giving back 2 full risk boxes, which was too much. So 1 unit of reward, 1, 2, 3, 4. So that's plus 4. Played the PSAR flip box again, scratch. I'm only playing long on that after that strong move, so I missed the short. PSAR flip and nothing. PSAR flip and nothing, minus 0.5. So this comes in at about 3.5 for today on Cliff. dashboard number 1. Still bear quiet. Wait for that thing to wake up and start to rage. The 270's getting weaker. The midterms are getting weaker. They're falling. And then the 2 and the 10-day look back are both extremely weak. Oversold conditions. Barely into the positive here on the risk Z. In fact, it's no longer abnormally good. It is now back into neutral. If this collapses, look out below. Chevron, ExxonMobil, Coke, McDonald's, Caterpillar. So these are all staples and industrials on the min pain. The max pain continues to be Intel, Disney, Boeing. Dow Tactical Summary, now that we're getting a pullback away from that 10-day and a small range day, it is not surprising to see all of these auto framers firing. A large number of 5DDs to choose from, so I'm not going to go through each one of them, but you should be looking for these high payoff 5DDs, especially like Apple. It's 3.4 to 1. Is a 5DD, a triple screen, and a 551W, meaning today's candle was closed stronger than the open. It's also an overreaction long, so it's above its 200-day moving average and looking good. And it was a doji. That's about as ideal as you could get in a trade for Apple, while remembering that it's bear quiet. That is sort of an ideal case in my view. What's even better? I would say something like, where can I find one that's better? I like better. Microsoft ain't bad. I wanted to take a quick look at Apple here, so we can see just what kind of compound goodness Apple has. Holding steady at the bottom of his 5-day range and 10-day range, just barely testing his PSAR. The RL10 hasn't crossed it yet. It has recovered most of the sell-off all the way near the top of the RL270. So look at that was the all-time high in Apple, and it's almost back there. It's holding steady at this little support level, so there's a tactical trade available right there. But if that fails, you wouldn't be surprised to see it get to here or to here. So out of this critical state, you have a reasonable trade to the downside, a reasonable trade to the upside. You would look to add another position here if it breaks out above that, and then a third position if it breaks above the 150-day high. That's a pretty strong play. The last time it was that oversold on %R was back in here. And that's a move in Apple from a 130 to 175. That's about a 35% gain to the upside. That was a Godzilla back in the day. And that's all Godzilla does is just enrage. Now, what you would probably say is, hey, that looks like a cup and a handle. So now if this holds and takes out across there, boy, that's one of the strongest patterns ever, is that cup and handle. What I like is half a cup and complete the cup and then wait to see if it makes a handle. I like getting that trade all the way up, but I recognize the power of that. The downside is equally compelling, though, too. Remember, let's not forget the earlier discussion of the bear. All right. Some real weakness here in Verizon, getting creamed by the news that Buffett has dumped it, so that's just suffering and no hope for it. One breakout to the upside in Chevron and energy, that's sort of a no-brainer. A little bit of weakness creeping in on Microsoft. Fix Windows 11, you guys. Visa had a little bit of a breakdown too. So you might like the 5-day down. I do. You might like the 551W. I do. Especially like with 3M when it is a 5.4 to 1. What's that look like? This is what a 551W looks like. So in a 551, it is up compared to 5 weeks ago. So we find today's closing price and we go back 25 days. So here's 20. 1, 2, 3, 4, 5. So here's where it closed 25 days ago. So it's higher than it was 5 weeks ago. That's a good thing. It's lower than it was it's lower than 5 days ago. So that means there was a measured pullback. So we go back 1, 2, 3, 4, 5. Here's where it closed 5 days ago. So there is your measured pullback. So at one point this thing was amazing, but now has pulled back, and now it's stabilizing at the bottom of the 10-day and 5-day low. And today, the 1 means that today the close was greater than the open. And if we look at that thing a little closely, we say, oh, they were actually willing to hold this higher than the opening. That's the first hint of a beginning of a turnaround. And then the 551W, the W means that that Williams percent R is less than minus 50, meaning it's in the bottom half of its 10-day range. Meaning that if it breaks out of here and just goes up to test the 10-day high, then we're going to have a favorable reward to risk ratio on something that is now kind of compressed into a tight range. And now, since it's postured at the 10-day low, if this fails, the 551W failure pattern in a bear says it could get back to here. So now you have a critical state ready to go to the upside and to the downside. So that is the 551W pattern in a nutshell. Now, there was a time when this was also, I think, probably a 5-day down, because you had 1, 2, 3, 4, 5 days down. Now, when we set up a 5DD, you're waiting to see a breakout of here to go long. It couldn't make that today because it was a small range and didn't have the power. And then the 5DD failure might have been getting short here. So that was a potential intraday, but it didn't last very long. So the fact that it did not fail today after this, I think, is residual respect for the fact that the upward move is still there. And now we're seeing a tightly framed little compression box here in the 0 state. And if it breaks out now above, what's that, about 140, 142, then that is a swing long position with a risk of right here. Now, could you also dial down to 1 hourly charts and then manage that intraday? You sure could. You could start that off as day 1 on a swing and swing trade one day at a time. And when you come over here and look at it's got about a 40-cent R10 box. So that's that if you're going to do that intraday, you're looking at about a 40-cent box if you're using 3, 5, or 10-minute charts. I might use 80 cents as a risk box if I was using 1-hour charts. I might wait to see it open, go high, low, close, and whatever for 1 hour, and then play the breakout in the neck above the first hour's high as an indication that it's going, but buy it not later than breaking out above today's high. So that's essentially the 551W, and this is a 5-to-1 trade to the upside on a symbol that has had positive movement for 5 weeks, has had an orderly pullback, has stabilized, and so this may be essentially, what did we just discover? Oh, that's really a specific form of a Kata 2 trade. But before it ever even gets to the breakout box. Now, the reason I like this to the downside is because you already have the Kata 2 here, or the PSAR flip, and then this is already failing, and we're in a bear, so that could fail easily. So that's the 551W. What I like is the fact that it has such a tight range compression, which gives us a small amount of indecision, and then the breakout from that in either direction. I am directionally neutral. I just know there's a large trade in either direction on 3M. Now we could go over here and take a look at the reward to risk ratio and sort the let me go back to the tacticals. If I just go to the reward to risk ratio, the best one in the stack is Global Future of Finance at 9-to-1. Let me find one that's Microsoft is 4.3-to-1. That one's not bad either. Microsoft has essentially the same pattern. It ended in a little doji, and I like the fact that it's got the auto framer on that is showing 4.3-to-1 and 80-cent R10. And that tight little wrist box in either direction, directionally neutral. A nice rebound here is 4-to-1. A breakdown from here takes them all the way back to the 20-day low at 260. So Microsoft is in the window of very interesting trading. Now, why would Microsoft and Apple and 3M be so interesting? Well, in tech, Apple and Microsoft so interesting because if you wanted to participate in a recovery, like if you think this is just a buy on dip, and you notice that Microsoft and Apple are at attractive pullback prices, and you can get them on sale, why wouldn't you? That's a compelling reason to buy if you are a large fund manager and you have cash on the sideline and you want to start building your position at favorable prices as market conditions slowly improve. Microsoft and Apple are kind of no-brainers. Who could blame you for wanting to own them? That's the argument for conservative tech leaders these days. Yeah, Gary, you options players have all sorts of strategies that you can use to exploit the tactical opportunity that I've just described. Danny Ben Yair's 11-lesson options course, where he shows specifically how to employ options in conjunction with our swing trade patterns, is certainly worth your attention if you're an options player. Very favorably priced. Just saying. All right, back to our regularly scheduled program here. In the ETFs, again, it's going to be the same thing that we just saw in the Dow. Tons of auto framers, just about everything. Real strength here in energy, no surprise. In oil exploration, no surprise. Breakdowns here in treasuries, that's a bit of a surprise. And a breakdown in real estate is going further. That's the most surprising thing of all to me, is why is residential real estate failing? Oh, I know why, because the house flipping of residential homes is a bubble, because every other show on TV is how to flip houses and sell to the next greater fool. So be mindful of that. And we're seeing housing in key cities across the nation starting to peak and begin to sell off. So residential real estate is showing some weakness after a really good run. I would be careful on that. Now, there's a difference between flipping houses, as my brother does, and buying the ETF that tracks residential real estate. This is why I would be a little concerned with IYR, the real estate. This is that's not as healthy as the broader market. And today's sell-off in IYR was more decisive than it was in the S&P. So that's what the S&P did yesterday, but today the S&P kind of just held in there and held right here, but real estate continued to fail, and it just broke below this level. So now the next support level is down here at about 95. So there's more potential short-term pain in IYR. Now, one of the reasons to watch IYR is it lets you participate in real estate, residential, and pays a really nice dividend. So the further this goes down, the better that dividend percentage is going to be. So that's one that's worth timing for potential income investment there. All right, back to auto framer. It's everything basically is on the auto framer, and plenty of squeezes today. And here's the ones that just jump out at me: Intel and Microsoft, Walmart, SPY and McDonald's and Tech. That's telling you all of those. There was no panic selling in those things today. And to me, Intel is the most intriguing stock in this whole business. Now, if I was Elon Musk, I'd be looking to buy Intel instead of Twitter, because the U.S. government is going to spend about $60 billion to bring semiconductor fabricating back to the United States for national defense. And why Elon doesn't buy Intel and get into the chip fabrication business for his cars, I don't know yet. But you got to think Intel, NVIDIA, Texas Instruments. Who's going to be the domestic chip manufacturer? You cannot keep that in Taiwan, obviously. That's been obvious for 10 years. But Intel is clearly the intriguing one to me. Boy, that's not good. That's as Godzilla as you want right there. Holy smokes, Intel. Once the greatest company in America. Holy smokes. This shall not stand. Man, we got to start buying that with both hands. It's just inexplicable to me. How do we not buy Intel at that price? Needs more work. Got to assemble the Avengers and start studying Intel. Mark my words. Snipers, assemble. HBI and VFC for the Godzillas. Already beginning to rage. And we got VXX in the Godzilla. Now, here's what's dangerous about that. That is at an extraordinarily low position for portfolio insurance in a bear quiet market. You know what it would take to get that thing moving in a large way? Not much. I want to start investigating some options on that one for portfolio insurance while you still can, while that price is so low. And the absence of volatility. Holy smokes, is that a negative signal? Wow. Lots of fireworks here. Sorry if I'm all over the map today, but man, there's a lot of things happening here. A is interesting. There's a popcorn. MDT is the volatile one of interest, as is Halliburton in the oil service. The fall is dominating our four seasons. Intel, you curious puzzle wrapped in an enigma, wrapped in a mystery. I always listen to my spider sense. I don't always act on it, so do your due diligence. Strength today, no surprise, Devon, Chevron, ExxonMobil, oil exploration and energy, oil in Brazil. This is the intriguing, real estate. And how bad can Intel be? That's about as bad as it can be. But it wasn't as bad as some of these other ones. Intel. Let's watch that one close. All right, let's get to the sniper trade before we run out of daylight here. All right, here's Alcoa. So today it was the metals. Here was the gap up. Here's the OR3. Here's the breakout to the upside. There's the standard risk box. That's what we're hoping for. That's what we get to a standard exit. Man, I drew it right on the line, too. So that one is 1, 2, 3. Kata 2. So that one surprised me. I thought that felt like it was going to fail. So what do? You trust the PSAR. There was another entry possible in there. So that's 1, 1, 2, 3. That's +6 so far. Not interested in the short side. Let's Who's this? Brazil. Here was the close. Here was the open. So there's your gap. Here's the opening range 3. There's a breakout. Put the standard risk box on it. One, two, three. Caught a 2. Scratch. Nothing much else. Next one up is Devon Energy, 3 minutes. It's getting repetitious. Here's the close. Here's the open. Here's the OR3. Here's the breakout to the upside. Put a standard risk box on it. There's +2. The Kata 2 could have been as soon as here. I waited for the PSAR flip, standard risk. Scratch. That dropped like a rock. I missed the short, but I was not interested on the short side. Now I'm really regretting missing the short. So I take the Kata 2, scratch, miss the short again. Kata 2, well, actually that's more like an SSC, and fractional gain. So that was about +2.5. This was the cost to having a bias only to the long side. I missed both of those. A cost that I'm willing to pay for simplicity and span of control. And it was consistent with the trading plan. And then Cliff, you already saw this one. Gap up, OR3, breakout, standard risk, capturing 4, scratch, scratch, -0.5. Started promising and then nothing. All right. Shift to the traders. All right, are we back? Okay, sorry. All right, so this is Les. He gets there's a Z3 compression. He buys the breakout, takes a quick exit. This was the indicated re-entry. Or here. It doesn't take those, and we missed that one. This PSAR flip. This was a good quick exit and good scratch. But this reentry here, especially in early days of an expansion, want to check your reentry criteria. That was the New Zealand dollar, by the way, not the Aussie, sorry. Tim, looking well refreshed back from his vacation. Nice work, good scratch, got paid. Quick exit, the stop and reverse gets paid. Good scratch, good micro loss and gets paid. Great re-entry for 2.9. Super. I mean, just nice. Nice as can be. The much more simplified screen that he's using. You can use, I think, the Z-score ladders, river, floodplain and whatnot, but the simplified version seems to be helping with trade management. Less information. Simpler dashboard for execution, I would say. Here he's doing the micro West Texas crude. 1.5R. Nice, great re-entries all the way through. Nice work. Although I can't make really any improvements on that. Was I missing one in there? No, I guess not. This is a really nice study from Luke. What he was looking at is a maximum adverse excursion. So he's taking a look at 50 trades here. Okay. And when the maximum adverse excursion was low, all it did was return between 0 and 6. And when it was 0.1, it was a scratch. The 0.2s paid off. And once they got to point, and so all of this stuff is really favorable. Once the excursions get past 0.6, these are all negative R's. So that's minus 1R. So 0.6 is the key. Any trade that gets to 0.6 anyway, just wipe it and wait for the next entry. All you might do is miss out on one winner, and you probably have a re-entry on a COTA 2. So just reset and stop hoping. Just cut it. It's like speed dating. Right? You know right away. That's where the odds are. See a lot of trades. If I have to start finding reasons to stay with it in early days, then there's something wrong there. That same mentality, the cathartic release, he's in trades 2600, 8.7 today. Z compression. Now notice how those support levels are working. When it breaks out, he stays with it. And then when that rolls over, collapse. It can't hold, collapse. This was where that next one should have been, Haas. And then when this didn't fail any further, even exiting a little early. But that's the one I want you to get based on this strength right here. So yeah, I like your 8.9, but there was another piece there. That was so good right there. When those green lines no longer hold, what was once support is now resistance, and that's a sign of increasing weakness. That's really nice. Arch looking good, and I think this is the same one that Luke got. Beauty, 4.5. This was good work in here. That was worth the shot. Good patience. Good patience. Great re-entry on the PSAR flip. And then just notice, after that, the healing properties of the SSC and the COTA2, there was another 6 there and 2 more here. Once that thing is in play, boy, it takes a long time for that much energy to go boing, 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 and then slowly calm down. Volatility begets volatility. And we saw that one already. All right, apologize for all the technical shenanigans, but good work today, guys. Really proud of what you guys are doing. Hang in there.